Well, it was another difficult session for the market as strength in banks and energy just couldn't offset overall selling pressure. In fact, the session actually began higher. It looked at one point like we were going to have new records established across the board, and, well, then it all went south. Now, there's several theories on how it started going down, but once that first domino fell, selling begat selling until U.S. Treasury Secretary Steve Mnuchin, he began to speak at the White House press conference, and Wall Street liked some of the things that he had to say. He said, listen, tax reform is, quote, pass-fail. It's an exercise that must get done. He's aiming for it to happen before the August recess. He didn't really defend that 15% corporate rate, but he did reassure everyone that whatever happens, it's going to be great for the economy, great for Americans, and it's going to put people back to work. His comments actually sparked a 130-point Dow mini rebound, if you will. As it turns out, the Dow did finish down, though, 167 points. We were 90 points off the lowest point of the day. And then there's the NASDAQ Composite, which actually opened under weakness. It was weak all day. Ironically, it was Apple, which celebrated its 10th anniversary of the iPhone, that sparked some of the jitters today. But, you know, it's the same kind of rumors that have haunted this stock and this company from time to time when it comes to the iPhone. A lack of supply or a dip in demand. Now, today's rumors were that there weren't going to be enough of those light-emitting diodes to cover demand. Of course, that would be a high-class problem, by the way, to have, and that sent down shares of Universal Display almost 4%. Other key suppliers, including Skyworks, Broadcom, and Cirrus Logic, down as well. I will tell you, I've been holding my Apple in my retirement account for years. I've lost track. So these stories have never fazed me, as the company has sold $1 trillion worth of these iPhones, and I really think that's going to continue for a long time to come. But speaking of long-term investing, banks, that was the strongest sector in the market today, and it provided a lesson for those who are still reluctant to invest. See, I've been preaching the notion of being an owner rather than strictly a customer for decades, right? It's the only way that you can leave behind a fortune or change your family's financial arc. You've got to own something: stocks, real estate, business, something. So case in point, July 2012, your average 5-year CD was paying 1.2% thereabout. Most bank stocks, they were still trying to regain their footing. So if you bought a CD seeking safety, it would be worth $21,124 next month. If you had decided to become part owner of one of these banks, well, in one of these banks, you could have made 217% on your money. In other words, you'd be sitting on $60,000 right now. By the way, after the close, two very important earnings reports. Micron crushed Wall Street consensus, offered strong guidance well above the Street's estimates. Initially, it was up. Right now, it's flat. Nike beat the Street by 10 cents. Both stocks higher. Could help technology, could help brick and mortars. Let's watch those in the morning. Also, folks, the market has been dicey, but this is when you get great stocks on sale. But only if you yourself are on shaky ground. And the way you stay on solid ground, rather, is to make sure you get my daily market commentary. It's really going to be important in the next few days. WStreet.com, because I'm pumped and I want you to seize the moment.